And so I think we've got a rally for a while. I think that we need to, as the commodities guys say, back and fill. In other words, digest the gains that have been made. I mean, silver's up 25% for the year. We're not even at the 6-month point, almost there within a couple of weeks, but 6 months into the year, up 25% is pretty good.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Got a rare treat with us now, David Morgan and themorganreport.com. I'm an avid reader of it. David, it's great to have you back on. It's been a while. So what are you making of the metals markets now? Are we just stop clocks and we've been right once every 10 years? Is that what's going on here?
Yeah, something like that, Kerry. Well, good. It's good to be back with you. And, well, it's been very trying for metals investors for over a decade, as you well know. I mean, we had a peak in April, May 2011 with silver around the $50 level. And then since that time until now, we've certainly had some pretty good rallies, 2016 being one I can recall. But overall, we had a real bear market, really, within what I think is a secular bull market for the metals. And then gold, peaked in September of 2011 and hit around the $2,000 level and didn't get above that until a few months back, where we finally reached the 2,000 level and been as high as almost 2,500 or so. And now we're kind of making a high-level consolidation above 2,000 for gold. Definitely broken out. And then silver started to play catch-up just within the last month and a half or so. Yeah, we've seen it go above 30. And these round numbers are psychologically beneficial. $30 silver is a lot better than $20 silver. And today we're at 29. And so I think we've got a rally for a while. I think that we need to, as the commodities guys say, back and fill. In other words, digest the gains that have been made. I mean, silver's up 25% for the year. We're not even at the 6-month point, almost there within a couple of weeks, but 6 months into the year, up 25% is pretty good. So I think we're going to be in a trading range between, I'm guessing, 29 and 31, that type of thing for silver, and gold, something similar, I don't know, 22 something to 24, I don't know. Somewhat, I'm just giving you the idea. But the summer doldrums usually happen. I mean, that's a seasonality that's a high probability, guaranteed. No black swan would change it. But I think for the most part, that's what we're going to see. Well, we got to remember, as you said, look, we're at a different place. I mean, we're for the last decade or more of where we're really wondering if this bull market is ever going to start again. And the answer is it has. And now we're going to get these pullbacks and these, back and fills where people get discouraged and they say, oh, it's not going to go. And then it goes again. And then they'll tell themselves, I'll wait for the next pullback and I'll buy. And they don't. So wall of worry gets climbed. The bull shakes off a lot of bullish people because, for whatever reason, they decide to sell at a temporary top. And then they're right for a while. And then the bull market starts up again and catches by surprise. And they make a promise that they can't keep, that I'll wait for the pullback. Pullback comes, they still take action, and the bull runs away from them. And we need a new investment. We've got a lot going on in the silver market we can talk about, but we don't really have any significant institutional investment, although there are some that are coming in the last month or two in the silver market. So that's encouraging.
All right. So, one thing that shows this market something happening with is the volatility. I mean, the other day, silver lost $2 an ounce and gold lost like 80. And reminds me of 2011 where they'd have these pullbacks and it would quickly shake it off and move ahead. What do you make of the volatility?
Well, volatility is uncertainty, or what I call undeterminable meaning you don't know if it's going up or down. It's doing, it goes up, then down really hard. And then you're like, well, what is it doing? And it's a fight between the bull and bears, and again, what the future holds in the futures market. So I make it as a positive in a bull market, because if we really have entered a new bull market, the volatility is going to shake out the weak sisters. The strong hands are going to accumulate more. There'll be new buyers, and you're going to continue with the bull market. So kind of aligns with what I said a moment ago, that you're going to see a shift in the metals market. I mean, there are going to be some people out there that were true believers for a decade or more that sold out at $30, broke even because they bought it at 25 when the premiums were $5. And so now, they paid 30 for $25 silver. They broke it even, or maybe made $1 an ounce or something, and they're satisfied at this point in time. But then when it moves to 60, they're going to say, oh my goodness, what did I do? I should have held it.
How did I blow this one? Yeah, well, it's always darkest before the light, right? Right. I mean,
Well, I could add more. I mean, one thing that's really driving the silver market is China, and that's twofold. I mean, one is the industrial side. The industrial side for silver is almost beyond belief. I mean, I don't want to be use hyperbole here, but the amount of photovoltaics is way beyond what the reality is, way beyond what both major silver studies have reported. The Silver Institute had to make an adjustment to what their forecast was, and even their new forecast is really behind the reality. Same thing with the New York CPM group. Metals Focus really does a lot of the work for the Silver Institute. So they're behind on that. And then the market mining-wise has been flat for several years in a row now. So we're really not getting a lot of new input. And recycling has been pretty much flat as well. So you could project out that the overall silver market is a 1 billion ounce market for the next 10 years, and you'd probably be about right.
And we had industrial
demand alone will supersede all mining and recycling from this year forward for the next 10 years. So you're going to have to eat the above ground stockpile. Well, you're going to eat the above ground stockpile at the same time industry is expanding, especially photovoltaics, and investment demand will be increasing due to the final phases of destruction of the dollar. So you're going to have two competing forces at the same time, and I think they could feed on each other. So I'm looking forward to one heck of a market over the next few years.
I couldn't agree with you more. We've talked so many times about the ever-expanding use of silver, uses, applications for it, but certainly the solar thing is just blowing it out. Maybe nanotech will absolve the need for so much silver, but the fact is we got this deficit, and it's going to continue onward into the future. What price, if they said, we are desperate, David, we know you got a ton of physical silver literally hanging out there, what's the price you would sell it at today?
Yeah, that's an excellent question. Of course, it's an individual choice. I'll just use a round number of 100, but that's not the point. The point is that industry, not investors, but industry will pay almost any price for it because it's price inelastic on the demand side. Let me explain. If you've got a $3,000 refrigerator freezer, and it uses right now, 25 cents worth of silver. If silver goes up to tenfold and it's $250 to put that silver into a $3,000 item, do you care?
No. Yeah, could care about.
It's up 100 times, and it goes to $25 for the silver required for a $3,000 refrigerator freezer. Do you care? No.
How much?
That's the deal with the application of silver in most electronics. In most places it's used. Now in photovoltaics, it's really not. It's I forget what it is. It's
25 grams or something.
Yeah. Something not that 20 or 25. And the new ones use a little bit more. But so you're looking at half an ounce. So the panel cost. I don't know what the panel costs I have at this house, and I can't remember exactly what I paid for. Point is, it could double. It could go up tenfold. It's not going to stop the solar panel industry because it's still a small cost. relative to the overall cost. And that's the point. So industries, the answer for industries, they pay damn near anything. They pay $1,000 probably to stay in business. And the point being, you cannot substitute anything for it in most cases. Sometimes you could substitute gold. Well, that's 80 times the price. So why would you substitute gold? Okay, we'll use platinum. All right, platinum is 40 times the price. So what are you going to do? So silver goes up 40 times. Platinum stays put. All right, you're paying the same and you get a better result. I think platinum or gold doesn't give you the power that silver does. It's a superior metal for that application.
No question. How much is in the average cell phone? It's like 1 or 2 grams, something?
Yeah, it's very small. I forget. But what I do know is that when I used to make the remark that you never melt down your cell phone, for the silver that's in it was a true statement at that time because it was prior to the smartphone. But now gold is in the smartphone and it is worth smelting them down because it's got gold in there. And so you get the gold, you're certainly going to take the silver and everything else you could get. But on a silver basis alone, it isn't.
Right. Gotcha. Yep. Yeah, well, it's definitely mandatory. And the beauty is it's like the catalytic converters in the cars. It's like a very small overall percentage component of what goes into a car. But if you have to have it, you don't have a choice. You can't have an ICE car without a catalytic converter because cities are not willing to go back, and this is around the world, to the air pollution we had when you and I were growing up here, David, in the 60s. I mean, I remember we used to drive into New York City, and there was this viaduct that they called on the news, they called it the Big Horseshoe, going into the Lincoln Tunnel. And when you looked out there, you had a view of Manhattan, and the sky was literally yellow from all the sulfur dioxide from the coal-burning power plants in and around the metropolitan area. 10 years later, that yellow streak in the sky that was permanent was gone. And it's the same thing here. Nobody is willing to go back to the way things were before we had all these wonderful products, David.
Exactly.
So,
well, there's more and more on the silver side all the time. I mean, the AI is going to use a great deal more electricity, and we're trying to go green. And I put up I think it's about 3 minutes long, maybe 2 minutes. A young journalist asked a scientist, should we go all electric by 2035? Excuse me. And he says in a word, no, because even an electrical vehicle doesn't have any, emissions. You export them. It takes like 500 million pounds of earth to be moved to create the equivalent of, to start an electric car. And then it takes 100 to 300 barrels of oil to make one barrel equivalent battery. That's a 300 to 1 ratio in the negative. This is causing all kinds of carbon. He talks about the carbon debt. So he goes on and on with these facts that most of the EV people don't know. And, I'm not trying to get anybody's face. I'm an engineer by, my first degree, where I went on and got finance degree. And I'm not talking about how many degrees I've got. I could care less. But the point is, the engineering, you have to be objective. Can't like, I want it this way or I'd like it to be. It's got to be exact. Got to have exact tolerances and everything else. So the point is, I like the fact thing. And the facts are, there's no way. He said at the bottom, there's no way that you can go all electric. There isn't enough minerals on the planet. That's the bottom. And now, if you add AI, we need more power than we're generating. And everybody wants to do away with coal and, just coal. Maybe natural gas as well or whatever. I mean, you're not going to do it all by solar. There's not enough solar on the planet right now to go solar for it. No one talks about that. They just, we're going to put up the solar plant. One more thing about the photovoltaics. We put in the Morgan Report Premium Edition a couple months back, but India that imported the tons and tons and tons of silver, one of the biggest imports they've ever done, is for a solar farm that they're putting in India that's 5 times the size of Paris. To think about a solar panel farm that's 5 Paris Frances combined, that's a lot of silver.
It's a lot of real estate, too.
That's a lot of real estate, yeah.
the folly of all this. And hey, like, it's great. If we can economically produce electricity, that's great. But if we need subsidies and everything else to accomplish it, then we probably shouldn't be doing it.
It's inefficient. I mean, it's what, my friend Steve St. Angelo talks about all the time, energy return on energy invested. If you look at it from that aspect, are you going to waste 100 to 300 barrels of oil to make the battery equivalent of 1 barrel of oil? I mean, that's the most insane thing you'd ever do. But yet now you got a battery for an electric car.
It's all a throwback to the 60s. It all started in the 60s, like this anti-progress group, and now they're in power, and they don't really have any grasp of economics whatsoever. None.
Yeah, it's very disheartening, to put it politely. I put that video up on Twitter, and boy, it was probably it was the one video that I put up that's been reposted more than anything else I've ever put up. That just went, I wouldn't say viral, but it got a lot of reposts. And some of the comments, I don't read them all half time, but one of the guys wrote, well, yeah, maybe that's true, but at least my maintenance is almost zero. Okay, fine, but that doesn't justify what I presume the green movement is looking at, which is being, sustainable. I mean, if let's look at the other way. If you were taking 1 barrel of oil to make 100 barrel equivalent battery, I'd be doing every show about that.
Yeah.
But it's the opposite. It takes 100 barrels of oil to make 1 barrel of oil battery. It's going the wrong way. But yet people don't see it. They don't understand it. They can't grasp it. Or even if they grasp it, they make an excuse of why it's okay.
Yeah, well, hey, I've got an EV, but I don't have it because I think I'm saving the planet. I mean, that's absurd. It's like, they're cool. The driving experience is superior to an ICE car. The tech, I mean, I seldom ever drive my car now. Most of the time it's driving me, and I'm kind of just overseeing it, much like a pilot in an airplane with autopilot. Turn some dials here, getting ready for landing, whatever. But, as far as saving the planet, we better find another way to do it. Maybe pneumatic-powered cars.
Yeah.
There was a Ford pickup truck they tried that with, and it actually worked pretty well, but it's a little impractical. So the most sustainable energy we've ever had is petroleum, right?
Yeah, for volume and energy contained, it's hard to get the energy equivalent of a gallon of gas any other way. Really is. And so, the man hours is, like 25,000 man hours is in a barrel of oil. I mean, if you work for $1 an hour, which is substandard for any state in the union, that's $25,000 in labor at $1 an hour. Who works for $1 an hour? So is, $80 oil expensive? Well, that shows you how cheap it is in man hours, because, you put your gallon of gas in your lawnmower and you mow your acre of grass, and you don't think anything about it. You just paid, $4.50 for that gallon of gas. But if you had to do it by hand, labor-wise, it would be quite a job. So, it's just, I think we've taken the cheap energy for granted for too long, and now we're getting near the end of it. Some people believe we are, some people believe we're not. I'm not neutral. I think we do have a finite amount, and that we are going to get a place where either by legislation or sheer amount available, where the energy supply of conventionals, oil primarily, starts to get tighter and tighter. So it's hard to say. I mean, I'm always looking at it, looking deeper and harder. But from what I've studied, we are not going to live in this cheap energy forever world. It's going to start costing.
Yeah, couldn't agree with you more. All right, David, it's really great catching up with you, and we'll definitely talk to you again soon. Got a question for David or myself? Email address is kl@kerrylutz.com. You find David's site, themorganreport.com. The link is in the show notes to this interview on financialsurvivalnetwork.com. Make sure you sign up for your free newsletter. David, can't thank you for coming on enough. Be well. We'll talk again soon.
All right, Kerry. Thank you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.